What should you do if you get a letter from the IRS? Panic? Run around like Macaulay Culkin in Home Alone? Or maybe look for a ground floor window? We would advise the ground floor because you're less likely to get injured on that. No, none of that. We're going to explain on the program what you should do as a reaction to getting a letter from the IRS. Also, are you ready for the great wealth transfer? Maybe you're going to be on the receiving end of that. Maybe you're on the giving end of that. But it's estimated that $72.6 trillion is going to change hands from one generation to the next generation over the course of the next 30-odd years. So what have you done to ensure that you are going to have an effective transfer? That you, maybe as the transferor or as the transferee, have an understanding of what might be about to happen. So on those topics, we will talk at length here on the program. Welcome on into Dollars and Cents, where we help you make sense out of all of life's decisions involving your dollars. We're one of Central Florida's longest running radio programs, coming to you on a host of stations throughout the Central Florida region. We also happen to be a top 25 financial planning podcast. Over 40,000 downloads at last count of our podcasts on the various platforms. So make sure, if you're a podcast person, that you subscribe to our channel on your favorite podcast platform. If you have any trouble finding our channel on said platform, go to our website, Nelson Financial Planning. There you'll be able to see the icons. Click on the one that looks most familiar to you, and voila, through the magic and wonder of the internet, you will get automatically connected to our channel. Once there, make sure you subscribe, and then you don't have to do all of that again. My name, of course, is Joel Garris, certified financial planner, certified financial fiduciary at Nelson Financial Planning, where we got a team of great folks who stand ready to help in any way they can improve your financial life with a successful and cost-effective financial plan. Last week on the program, we actually did a rebroadcast. I was out of town, so those of you who are our regular listeners, I apologize for that. Just thought it was a good show that Christina and I did in anticipation of our 40th anniversary earlier this month. So I said, well, let's just run that again. I kind of hit the easy button on that. I think that's the first time we've done that in probably 2 or 3 years, so I appreciate your patience on that. We've got a full summer lineup. A number of folks are going to be joining me on the program over the course of the next few Sundays, so we're looking forward to all of that. And thank you for being a regular listener. We appreciate that. And if you're a first-time listener, well, then hopefully we're going to be able to share some interesting information that will be informational to you on the program. So maybe you're new. Maybe you are a first-time listener. Maybe you're new. Maybe you've bought a house or sold a house. And if you've bought a house or sold a house in the past few years here in Florida, you need to be aware of that. I'm just going to go with the word nonsense, the nonsense letters that you're probably going to get. Nonsense, in hindsight, might be a kind word. You could argue that these letters that come in the mail to folks that have either bought or sold a house here in Florida might very well be borderline a scheme, but we'll get into those details on what that letter is all about, because we ran into that just this past week. So my mom, those of your clients, we've certainly shared this story, getting older, unfortunately diagnosed with dementia. So over the course of the past few months, we've been sort of going through this transition. I know a lot of folks in Central Florida experiencing kind of the same thing with their parents and loved ones as well. And it is not easy, and that's probably an understatement to say the least. But anyway, so transitioning into to kind of one of those life care type facilities where you go in as independent and you transition to assisted and nursing, and so you don't, all in one kind of place. So, but what that means then is that you would sell the house that she had been living in, and so we did that, went through the process of doing that. The property closed in late April. 3 weeks go by. Everything is recorded. Everything's in order. Everything's signed. You get copies of everything, just like a normal type of closing. And so ultimately you get digital copies of anything and everything. And of course, included in that package is going to be a copy of the deed that everybody signed. Well, lo and behold, my mom is pretty good about holding her mail, and if she's got questions on it, she'll ask me. And so when we went to visit with her early this week, she had this letter, and it pretty official looking letter. If you follow us on YouTube, we'll hold up the letter. It's recorded. It's got like a little one of those Scantron type symbols on it, and it says recorded deed notice. So seems pretty official. It's got a respond by date. Please respond by June 7th, 2024. It has a parcel number for the property that was previously my mom's that was sold, along with a description of what the property was, built in 1981, what the address was, what the sales price was, all of that in this very official looking document. And the letter is designed to make you think that you need to use this service that is offered in this letter to, in fact, get a copy of your recorded deed. And for that wonderful service, you just need to pay $118 in order to get a copy of the deed. This is where the letter gets somewhat deceptive, because the reality is that you can go online at any point to the Registry of Deeds and print off your own deed for free. There's no really barrier to being able to do that. The Registry of Deeds websites for the county that you live in typically would have those deeds going back for quite a number of years, and so always easy to go online and just pull it up and print it off for absolutely free, not for $118, that's for sure. And here's where I guess these nonsense letters get into the sort of the borderline, deceptive, borderline scheme type letters, is because if you go into start to read the fine print, and there's a reason it's called the fine print, is I hope you don't read it. The fine print of this letter, the recorded deed notice, says that the $118 is not in fact for a copy of your current deed, because in essence that would be kind of like a borderline deceptive practice, but it is for their very special property assessment profile report that they're going to generate. And in fact, the copy of the current deed, which is certainly what the letter is all about. I mean, it's a recorded deed notice, so that would make you think that, hey, this is about my deed. No. That the copy of the deed is actually complimentary and not part of the service fee. Can you believe that? I mean, so I'm thinking about that. You get a letter that talks about recorded deed notice, right? Here it is, right? Recorded deed notice. I'm holding it up for our YouTube audience, and it's $118. And you think, okay, well, yeah, I'd like to have a copy of my deed, and maybe you don't realize that you can just go online and print out a copy of the deed, and that's all free. And then because you really would be deceptive if you were saying to people, well, you give me $118 and I'm just going to go online and print something off that you can get for free. So if you then read the fine print, the $118, even though the letter seems to make you think that you're getting a copy of a recorded deed, is actually for this silly little property assessment profile report. Bottom line, if you get the letter, just throw it away. When you sold your house, when you bought your house, you already received a copy of the deed. That was part of the closing documents, so you don't need another one. Plus, you can always go online and print it out for free. This is just one more in that category of borderline schemey/nonsense that unfortunately the world is full of these days. The recorded deed notice request for $118. Throw that in the trash. With that, we'll be back after these messages here on Dollars and Cents. So you've all heard about kind of this great wealth transfer. It'd be hard to kind of miss this conversation that's going on in the background, and the estimates that say that by the year 2045, between the boomer generation and the silent generation, expected to obviously pass away, right? 2045, that's another 20 years. So over the course of the next 20 years, those two generations will start to all pass away. And ultimately, as they do, they would leave behind, it's estimated to be almost 73 trillion. That's $73 trillion to their heirs over the course of that 20-year period of time. And what's interesting is certainly, you've heard this conversation, the greatest wealth transfer in the history of mankind. All of these types of articles and topics certainly have been popping up over the course of the past several years. But with all of that background information, all of that sort of knowledge that's clearly out there about that, hey, this is in fact going to happen, because you don't live forever, in case you didn't realize that. About a quarter of folks have had the discussion with their families about what it looks like. So by the math part of it, that would mean that 75% of families out there have not had any form of conversation about what that looks like to move money from one generation to the other. That's a lot of unsaid conversations that need to happen. And look, the reality is that the best way to prepare for this kind of a transition when it comes to money is to talk about it. I mean, as with anything, it's important to kind of talk about it. So we thought in this segment that we would give you some things to think about to help you maybe better prepare for what ultimately is going to happen, because again, nobody lives forever. So we will hit all of that on this segment of the program here on Dollars and Cents, where we help you make sense out of all of life's decisions involving your dollars. One of Central Florida's longest running radio programs, also a top 25 financial planning podcast. To learn more about us and what we do when we're not sitting here in our Nelson Financial Planning studios, visit our website, nelsonfinancialplanning.com. There you'll see things like our investment approach and philosophy and the services that we provide to our clients. My name, of course, is Joel Garris. I'm a certified financial planner, certified financial fiduciary at Nelson Financial Planning, where we got a team of great folks who also happen to be certified financial fiduciaries as well, who stand ready to help you improve your life with a successful and cost-effective financial plan. So this great wealth transfer by 2045, according to many estimates, nearly $73 trillion is going to be shifting to the next generation. And we understand sometimes these conversations, because we've certainly had many conversations over the years with clients about the difficulty involved with having these conversations about what's going to happen with the money that's going to get transferred, because I guess our observation is most families have some complexities. And I probably worry more about what might happen with somebody who comes in and says, we have no complexities at all in our family. Everything is hunky-dory, aces, all tens across the board. The reality is that doesn't really happen. Most families have some kind of complexity to them. And it's that complexity that really underscores the need to try and have these conversations. And there's certainly tough conversations to happen, to have. There's a lot of fear I guess it's implicit to that fear of that recipient not appreciating the money, fear that the recipient may spend without any regard the money frivolously, fear that the recipient may wind up with sort of a sense of entitlement and not really work all that hard. And the reality is, over the years, we've certainly seen where those fears were very much founded, depending upon the circumstance. Certainly these conversations are complicated for a variety of reasons. Three immediately sort of spring to mind in terms of sort of the complicating factors, right? The first is always the part about how you might not want to share, right, all of that information. A lot of people sit in my office and I say, well, do the kids know kind of what we're talking about here in terms of money? And more often than not, the answer is no. And we understand that. You might not want to kind of share all of that specific information. The second issue that I think is sort of lurking in the background of these conversations and why they don't happen as often as they should is that just in general, there is a lack of financial literacy out there, right? You hear that all the time. A lot of people just kind of lack basic financial literacy. And then you couple that with, and this is sort of the third factor that we would throw in, a lot of investment firms, a lot of financial planning firms, many of those types of firms, big, small, medium, all sizes, really make it harder for the next generation to actually engage with them, because a lot of those places have account minimums, right? So if you got an account minimum of $500,000 or $1 million or whatever the case may be, then you as potentially the recipient of that wealth, you may not qualify to become a client of your parents' firm. And I think that's one of the other issues that is prevalent out there, where there's a need for sort of that next generation to be able to sit and to get advice. But if they don't meet the account minimums that a lot of these firms establish, whether it's $500,000 or $1 million, then, okay, well, then how am I going to get an understanding of how finances work? How am I going to improve my financial literacy? How am I going to ultimately get on the right track? So I think those are kind of the three factors sort of behind why these conversations are as complicated as they are. As an aside, that's one of the biggest reasons where throughout our 40-year history at Nelson Financial Planning, we've never had, nor will we ever will have, any such minimum account requirements. I actually find that somewhat offensive when I think about it. It's basically saying to the person that's just starting out with $100 a month or $200 a month, hey, you know what? You're not deemed worthy of getting quality financial advice. We would object to that statement pretty strongly, because we've certainly, over the 40-year history of the firm, been able to see where that works, where you start out with a small amount of money and you do it consistently, and you do it regularly, and as your income increases, then you start doing more, you start adding more, and then over a 30 or 40-year period of time, you've amassed enough money to actually retire. Isn't that what that whole financial journey and working with someone along that journey is supposed to be all about? But anyway, I digress. But those are some of the complicating factors to the conversation. So when you think about the conversation that's got to happen as you start to explore this topic of transferring wealth from one generation to the next, we think that there's a variety of topics that really you want to make sure that you're covering in the course of the conversation. And so we've got sort of 5 things that we wanted to sort of share with you as you kind of think about what this conversation might look like. And the first thing would be, it's probably not going to be one conversation. It's probably going to be multiple conversations in order to make sure that everybody has an understanding and handle on the scope and the breadth and the depth of whatever the finances is that you're talking about. So don't just think it's a kind of a one and done conversation. It's also important to kind of update folks along the way. So it's really a more of a multiple conversation kind of thing. Number two, and I think this is usually part of the conversation or something that you want to make part of that conversation as you're having these conversations about, okay, well, what does that wealth transfer look like? You certainly want to use it as an opportunity to sort of share your values. Now, for most families, that should be somewhat kind of self-evident, right? But sometimes it's not. Maybe the kids are older. Maybe they've, been away. Maybe they've got a spouse, and so that is influencing the values, if you will. But a good opportunity to kind of set the stage and to talk about kind of those values that are important to you. We've got a few more things that we wanted to kind of share on this topic, but we're going to take a break, and when we come back, we're going to kind of continue this conversation of the things that are the topics that you really want to include in a conversation as you start to think about this great wealth transfer from one generation to the next. Coming up as we continue here on Dollars and Cents with Joel Garris of Nelson Financial Planning. So we're talking about the great wealth transfer. I'm sure it's a topic that you've probably seen in passing. It's this whole notion that over the course of the next 20 years, nearly $73 trillion is going to pass from one generation to the next. So the silent generation, the baby boom generation, as they reach the end of their lives, they're going to wind up passing wealth down to the next generation. So if you're in your sort of 70s and 80s, or 90s, or hundreds in today's world, then you might very well be on the giving side of that, meaning the money's coming from you. If you're in your 40s, 50s, 60s, okay, then you might be on the receiving side of that. So what we're doing on the program today is sort of talking through the importance of having that conversation and really delving into what that is going to look like. Because unfortunately, 75% of the population hasn't really had these kinds of conversations. And it's certainly very important when we think about what you want that money to continue to be able to do for the next generation. So before the break, we were sort of outlining some of the things to consider when you're having these conversations. And to recap the first two, first of all, it's probably not going to be a single conversation. It's an ongoing series of conversations that you want to have on a regular basis as well. Number two, it also presents an opportunity to sort of share your values. I mean, some of that should be self-evident, but the reality is that things can change, right? If you've got kids that are 40, well, it's probably 20 years. They've probably spent more time out of the house than they did in the house. So maybe those values that you shared as a family might have shifted along the way for a variety of reasons: work, spouse, friends, associates, whatever the case may be, but certainly an opportunity to sort of reset what that looks like. Similarly, the importance of being clear about what the plans are. Here's what's going to happen when we pass. It's equally, or it's not equally because we gave you a loan, or we gave a loan to one kid, and so that's going to adjust the numbers. You don't necessarily have to get specific about the numbers, but certainly to give a general outline and a general range of where things are, particularly if you've done something unique for one child and you sort of want to kind of use the estate planning or that passing of the money to sort of true all of that up. I remember one situation involving a client where they had given one child a particular loan, and so every year, but they weren't collecting interest on it, but every year they would record for their personal files the amount of the loan and the amount of the interest that would have accrued on that loan for that year. And so the game plan is that when they pass, then the outstanding balance plus interest, that sort of will get accounted for in the division of the wealth among the various children. So it's those kinds of things where you don't have to necessarily get into the specific details of the numbers per se, but it does help to sort of outline what you plan on having done with the money. Maybe there's some charities that you want to also make sure that get money as well. Important to kind of, again, set that table and make sure that you have explained that what that plan might be, because certainly having an understanding, and I think this is kind of the fourth thing that you want to think about in terms of these conversations about wealth transfer, is to give an understanding of who the decision makers are, right? So could be trustees, there could be executors, it could be all of those types of folks. A good opportunity to also make an introduction to maybe it's the financial advisor, or maybe it's the estate planning lawyer, or the CPA, the tax preparer. Who are those decision makers are, and how do you get in touch with them? I think where the accounts are and what the account numbers, those are some things that beneficiaries often find themselves sort of really struggling for and trying to figure all of that out. One of the best approaches I've ever seen a client do is that they basically created literally like a Word document. And so for every account that they had, they listed the account number, what it was, who the contact person was, who the address was, who's the phone number, all of that. And folks, that just having that single document, that single piece of paper, or several pages in this case, that really helps the beneficiaries know what they need to track down, rather than kind of leaving it more as this exercise of sort of looking for loose ends and pouring through file cabinets and the like. I'm sure you've heard plenty of stories of folks having to kind of go through all of that. And that makes it ultimately very, very hard to be able to do that on a regular basis, as you're sort of seeking out, okay, I'm going through file cabinets trying to find stuff. What is the stuff that, in fact, I am looking for? And maybe you know what you're looking for, and maybe you don't. Maybe it's kind of like an Easter egg hunt. I think sitting down and creating that document really does make good sense in terms of giving that overall description and sort of a roadmap, if you will. And again, it doesn't necessarily have to be specific, but having that document is certainly one of the best methods to really help make sure that the transfer of wealth from one generation to the other really goes as effectively as possible. And then lastly, as you think about the conversation to have, make that next generation part of that conversation about how the money should be spent. Maybe there's a plan for charitable giving. Maybe there's a distribution provisions in your estate plan where the next generation isn't going to get all the money to do with it as they wish, but perhaps they're going to get money over time as an income stream. All of those kinds of things would be important to involve that next generation in that conversation. Certainly, these are some pretty crucial conversations. The reality is that there is a lot of money that is transferring from one generation to the next over the course of the next 20 years. The vast majority have yet to have any kind of a conversation on that. That's one of the biggest reasons why we wrote our book, Next Gen Dollars and Cents. The notion is that when we think about the next gen, it's not necessarily the 20s and 30s, although there's plenty of our book that is designed to help improve financial literacy among that age group, but also the next gen might very well be people in their 40s, 50s, and 60s that are going to be on the receiving end of this great wealth transfer. So it's important to kind of really overcome some of those roadblocks in terms of financial literacy, getting an understanding of what it means to inherit money. All of that, of course, is stuff that we put in our book, Next Gen Dollars and Cents. Obviously, that's available on Amazon, but we also would encourage you to go to our website, Nelson Financial Planning. And there, you can reach out to us as to some of the options that you might have to get that book absolutely free of charge. So make sure you reach out to us for that, because that's the kind of book that we're talking about that really does help to increase financial literacy and give some of those concepts, particularly if you're going to be either on the giving or the receiving end of this great wealth transfer. Some pretty important stuff that's going to happen over the course of the next 20 years. And you want to make sure that you think about some of these topics that we've been talking about on the show to help lay the groundwork for having those conversations and making sure that as a family, everybody is on the same page, if you will, as that continues. So certainly something to be thinking about. Obviously, our book, written Next Gen Dollars and Cents, written intentionally for that kind of an option, whereby the focus is on financial literacy and ultimately getting a better handle of what happens when. We also included in the book some chapters on the pitfalls of inheriting money and death, the other certainty. So certainly a couple of chapters in the book that are directly on point with what we're talking about here this morning on the program. This, of course, is Dollars and Cents, where we help you make sense out of all of life's decisions involving your dollars. One of Central Florida's longest running radio programs, coming to you, of course, on a host of stations throughout the Central Florida region. Also a top 25 financial planning podcast. If you're interested in learning more about our firm, Nelson Financial Planning, go to our website, nelsonfinancialplanning.com. There, you could do things like ask us a question or request to schedule an absolutely free conversation to review your personal finances. My name is Joel Garris, certified financial planner, certified financial fiduciary at Nelson Financial Planning. And we're going to take a break. And we come back, we will tell you what you need to do if you get a letter from the IRS. So stay tuned for that. So you head out to your mailbox and you flip through your mail, and as most people do, and as you're doing that, your heart sinks because you realize as you're flipping through the mail, on the outside of one of the envelopes, it says U.S. Treasury Internal Revenue Service. As I shared on the program a few months back, I received such a letter in December, and it certainly does get the heart pumping. You know, as a side note, it's funny, I was actually out of town when the letter came in, and on vacation with my family around the hosolidays. And so there was this big debate in the office, because I have a lot of my personal mail actually go directly to the to my office. And so there was a big debate around the office as to whether they should, reach out to me and let me know while I'm on vacation that, hey, by the way, you got a letter from the IRS and they're going to audit you. Fortunately, the office decided that they were not going to reach out to me because they knew I would be back in a few days, which was probably good, because then that would have completely distracted me from my family and the vacation. But needless to say, when you get those letters, they will certainly get your blood pumping. So on this segment, we wanted to talk about what you should do if you get a letter from the IRS. Don't panic. Don't run around, screaming like Macaulay Culkin in Home Alone. The reality is that, of course, with all those new agents that they're hiring with the IRS, probably likelihood of getting a letter is probably higher than it once was. So what should you do when you get that letter? So welcome on into Dollars and Cents, where we help you make sense out of all of life's decisions involving your dollars. One of Central Florida's longest running radio programs, celebrating our 40th anniversary as a firm here this year, Nelson Financial Planning. That is a long time, and the neat thing about it is we have clients that have been with us the entirety of that time, and certainly neat to see kind of that financial journey and help them on that financial journey over the course of all of those decades. My name, of course, is Joel Garris. I'm a certified financial planner, certified financial fiduciary at Nelson Financial Planning, where we got a team of great people who stand ready to help you improve your life with a successful, cost-effective financial plan. So the reality is that the IRS certainly sends out a variety of notices and letters each and every year. Most of them are not audits, although the audit rate is certainly picking up and you're having more face-to-face audits. But most of those letters that the IRS sends out are typically sort of to ask certain questions regarding returns, maybe to notify of a particular change that they're making, maybe to notify you that, oops, you missed something, and we got a copy of it. We, the IRS, got a copy of it. So you know what? It needs to be on the return. And so we're putting it on the return, and here's what the adjustment is. And of course, requesting a payment for that. So most of the letters kind of fall into kind of that category. What doesn't happen, just to kind of underscore this, is the IRS is not going to contact you by Facebook or social media. They're not going to text you and say you've got to pay, otherwise you're going to go to jail, that kind of thing. The first contact, more often than not, really does come in the form of a standard letter in the mail. So what to do if you get a letter from the IRS? Well, first of all, got to open it, right? Got to open it, got to read it, because typically it has a deadline to respond. So you certainly want to make that deadline. It's kind of like that, that homework assignment with the deadline, except this is a real deadline because it's the IRS making the deadline. If you ignore it, let the deadline pass, then to the extent that you don't agree with what might be in that letter, you kind of lose the ability to argue that. So that's the other part of it, coupled with the fact that interest penalties, things like that, really do accrue and continue to accrue as long as there is an outstanding obligation. So certainly want to open it, certainly want to read it. Each notice or each letter that you get from the IRS typically deals with a specific issue about a specific tax return that you filed in the past. So take an opportunity, review the information, right? If you don't understand what they're saying, and we can understand why it might be difficult to understand it because it is a letter from the IRS, you want to contact your tax provider or whoever wound up preparing that particular tax return. They should be able to easily interpret that letter, explain its meaning, give you some guidance as to how to respond. Certainly at this point in the process, you don't necessarily need to reach out to a tax attorney. You may need to do that later on in the process, particularly if you're involved in a face-to-face audit. But you don't necessarily need a tax attorney at this point. More often than not, most of these, just with an understanding of what's going on, you can certainly effectively respond to it to try and get a handle on the issue, because most of the time these notices have to deal with the fact that you forgot to put something on the return, or maybe you put it in incorrect fashion. Because let's not forget how all of this process works, right? All of those documents that you get during the course of January, there's copies of them that go to the IRS, right? So the IRS is sitting there and they've got all this information, basically copies of the information that you got, whether it's your W-2, your 1099s, things like that. And they're kind of, that's going into their computer system. So they have a pretty good idea of what they sort of expect from your tax return. So oftentimes these notices have to deal with sort of misses where you missed some information or it didn't get reported properly. So once you have the understanding, right, make sure you're taking any kind of requested action, right? If you got to respond by a certain date, make sure you're responding by that certain date. If you got to pay a certain amount, if you agree with what the letter says, then more often than not, it makes sense to just go ahead and pay the amount if you're in agreement with it. There's no sense arguing over something that clearly you might have missed on your tax return or you forgot to include on your tax return. And then to the extent that you don't necessarily agree with the letter, well, then that's where you've got an opportunity to provide additional information or explanation. I guess here's the thing. If you don't agree with what the letter is saying, then certainly you've got an opportunity to sort of respond in writing with an explanation. And here's, I guess, the frustrating part of the process and why everybody kind of gets a little frustrated anytime they have to go through this, is oftentimes with these letters, unless it's kind of an audit where it's more of a face-to-face, you don't really get to talk to a person. The IRS still severely behind its processing, still from COVID. So they're still running behind in terms of being able to process the returns that are out there, along with any of the amended returns, things like that. So I guess that's probably the frustrating part that people experience is that you often don't get to kind of talk to a live person. I know our office on some of these notices for our clients, it's a 1-800 number and you just call and it takes forever to talk to somebody and you never get the same person and it's never the consistent story. So it's certainly a very frustrating process. But the reality is that it's not exactly something you can ignore, right? So if you get the letter, you've got to deal with it. You can't ignore it. And situations where people tell us, oh, I didn't bother to open it or I just set it aside, it only gets worse because then you lose the ability to disagree with what's being said in that notice. So bottom line, if you get a letter from the IRS, make sure you're opening it, make sure you're not ignoring it, make sure you read it, right? And to really get an understanding of what's being asked in that letter or what the letter is telling you. Maybe it is something that you missed that's, okay, fine, I missed, and so now I need to write a check. Or maybe it's something more than that. And that's where you certainly want to respond appropriately. And doing so will certainly minimize any damage that you might face when it comes to the IRS. So, yes, the reality is in today's world, those letters are probably more forthcoming than they have been in the past. Let's not forget, yes, there is in fact a bunch of new agents that work for the IRS these days. So if you get a letter, make sure you're opening it up and responding to it appropriately. With that, we're going to wrap it on up and get on out of here. Thank you, as always, for listening to the program. If you've got a topic that you want to hear on a future program, feel free to reach out to us courtesy of our website at Nelson Financial Planning. Over the course of the nearly 40 years of broadcasting this program, we've probably hit pretty much every topic conceivable out there, but maybe there's one you haven't heard us talk about in a little bit. We're always open to great suggestions from you, our listening audience. Make sure you check out our website, Nelson Financial Planning. There you can also schedule a free consultation. With that, my name is Joel Garris of Nelson Financial Planning. Have a great rest of your day.